For several trading sessions, investors have been mulling over the news on the conflict in the Middle East. Some of them feared that the confrontation between the United States and Iran could turn into a real war. However, market participants dispelled their fears after Donald Trump's announcement that the US would not take any military action against Iran. Washington will only impose additional sanctions on Tehran. This news was certainly bullish for the US dollar. Versus its six major rivals, it advanced to the level of 97.30, adding 30 pips. After the de-escalation Middle East conflict, traders take notice into account macroeconomic statistics from the United States. According to ADP payroll report, US private sector employment rose by 202,000 jobs in December, surpassing the forecast. Economists had expected employment to increase by about 160,000 jobs. After an upbeat ADP report, many investors are betting on strong non-farm payrolls data, which is due on Friday. The dollar-yen pair also benefited from the news on the US-Iran dispute. The chart is moving steadily towards the US currency, indicating that risk appetite is back. The pair returned to the levels of the end of December. It's approaching the level of 109.40, where it's likely to enter the consolidation phase. So the pair has a high chance to develop an upward rally. Besides, the phase 1 trade agreement between the United States and China will be signed soon. The pair is sure to advance amid such news. As a rule, traders buy the yen at a time of threats to the world economy of the imminent resolution of the trade conflict between the countries. That's why the growth of the yen may signal about the improvement of market sentiment. Meanwhile, fresh macroeconomic statistics from China also pointed out that the global economy remains resilient. Consumer prices in China grew by 4.5% year-on-year in December. Inflation held steady at a near 8-year high. Nevertheless, the inflation rate was below the forecast value. The producer price index did not meet the expectations as well, though it exceeded the previous estimates. The Australian dollar continues to trade sideways despite positive economic reports from China. Usually, the Australian dollar is quite sensitive to news from China. The Australian dollar did not resume its downward movement to the level of 0.6830 as we expected. On the contrary, it gained momentum after the release of strong data on the Australia's trade surplus. Nevertheless, we stick to our forecast. The Aussie may sink amid the expectations of strong US jobs data, which is due on Friday. That's all for now. We continue to keep close tabs on market developments. See you on our channel.